Sovereign Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. This is Market Today, a show where we'll help you understand the closing action on the D Street. With me is my colleague Shell Bhatnagar. Also, today's day has really panned out as a really down day for the markets. 435 points down on the Nifty right now. It's at the lowest point. We've now breached the 21,600 mark as well. Remember, we were talking about in the morning, in the headlines, that this may be the time when you should be booking your profits, and perhaps it's turning out to be that day. Nifty Bank, lowest in the biggest fall in last 2 years is what we are looking at. 4% down currently, 1,893 points of a fall coming in on the Nifty Bank, 46,236. And of course, a large part of it has to go to HDFC Bank. That's now down by 7.7% as well. Shell, for benchmarks, the Sensex and the Nifty, I think it's one of the biggest falls in the last 16 to 19 odd months. For the Nifty Bank, it's 2 years. The kind of fall that we are looking at in HDFC Bank is the biggest fall in last 3 years for HDFC Bank.
Wonderful. So once this kind of a panic starts, Sakshi, two things are worth to watch out for. One, that this is a time when good stocks will come down to sensible levels, and therefore one must think contra. If you've joined us over the last 1 month or so, repeatedly we've told you that caution needs to be exercised. Stop losses are your dear friends, and this is a party where momentum seems to be ending, and therefore profit should be booked. So for those who followed that advice, you should be very happy sitting on cash, and these are the times, especially on HDFC Bank, to look at it from very how should I say, not a jaundiced eye, and should this one correct a little bit more, then it makes perfect sense. Sakshi, 21,606 on the Nifty is exactly the 20 DMA. Let's see how it goes, and as you had very rightly pointed out, a very sharp fall, 2% down, and we had hoped that somehow the first 10-15 minutes of trade, in which you had seen this huge green candle because a lot of shorts were covered, would continue. Well, that hasn't. It also means that for the moment the daily sentiment, Sakshi, is now turning towards more profit booking, because once 10 DMA is broken, it essentially means that the trend has reversed. Okay. So the bullish trend is no longer in place. Now let us see on a closing basis whether we are able to hold the 20 DMA or not. If that breaks, then let's see how further it goes down. But for the moment, the 20 DMA is providing a fairly decent support. This is no cause for worry. In fact, these are good days. There is absolutely no change in our thought process that the bull market is in place. It's just that prices have got juicier and juicier. And should this correction continue for a little bit longer, then we'll suggest what are the levels that you should look at. Sakshi.
Absolutely, Shell. Of course, the question then now comes, of course, in the minds of all the people who are watching us right now, that, what should be done in the markets? I mean, like, should one really buy this dip again? Over the course of last 6 to 8 months odd, we've always seen the markets bounce back and show resilience every time there was some kind of a panic in the markets. But are things going to be similar, or is this going to be perhaps the beginning of a long correction that was long awaited as well after the sharp short while?
Sakshi, I don't think so. This will be a long correction. The good part is that the frequency of the fall is very sharp. So from 29th of December till about 14th of January, we were trading in that narrow 400 point range on the Nifty. and suddenly you have this change of sentiment overseas. I think the biggest trigger has been this flare up that's happened in the Middle East, and that's also, you know, a lot of things have got together. The statements coming in from US Federal Reserve officials that you know, the impending rate cut might not happen so quickly. That then the dollar index went up above 200 DMA. The US 10-year bond yield is now back above 4%. And then you have this crisis in the Middle East. Every country is attacking every country. तो कहीं तो impact आएगा ही ना. Now, how long will this continue? We'll be, of course, keeping an eye out. But is it a falling knife? I don't think so. Should we start buying? I don't think so. Should we start panicking? No.
Okay, great. That's the best way to put it out. Let's welcome our guest then on the show. Akshay Bhagwat, Senior Vice President at Derivatives Research, JM Financials, joins right in. Akshay, great to have you on Business Today television. What are you making of the kind of fall that we are looking at into the markets? You know, Shell points out that 21,600, that's going to be critical. In case we do breach that on the closing levels, will that set some more panic in the markets?
Good afternoon, Sakshi, and also good afternoon to Shailji. Well, you know, if you look at the nature of today's market, a big chunk of today's fall has come down in form of a gap down opening. So that's caught many of the traders by surprise. Especially, you know, it is the bank nifty normally which takes the lead of the proceedings, whether it is on the upside or the downside. So clearly here, bank nifty has caused a big dent in the way the short-term proceedings would go from here on. And probably the sense which I derive looking at the way the technical and the derivative parameters are showing up here, there is some more pain left, at least if you are a short-term trader. So the levels which one should be looking forward to if you are in Nifty, tomorrow being the weekly expiry for the Nifty, and the point where the highest put writing position is 21,500 strike in the Nifty. So there is a good chance that 21,500 put writers might get challenged in the opening trades itself tomorrow. 21,450, that's the low which we registered on 10th of January. That's the swing low on technical parameters. That is, there is a very high probability Nifty should immediately aim for those levels, and we will need to take a review as to how the trend plays out once those levels are hit. So yes, further 150 down is where I foresee the Nifty going. That may happen tomorrow itself. A slight negative texture to the market. There is where the review will be, whether it manages to cling on to the support or not.
Okay. Akshay, a very warm good afternoon to you, and it's always a pleasure to host you on Market Today. Let's look at HDFC Bank. Let's just take Sakshi's opinion. Would she like to hear the negatives first or the positives?
Positives first, this time around.
Okay. So the chart is in front of you, and let me list out the positives. Of course, this sell-off is hugely, you know, volume driven. We have about 10,800 crores worth of transactions that have happened, and let me just point out the good parts as far as Sakshi is concerned on HDFC Bank. So Sakshi, there are three reasons that this downturn happened, and none of them are related to the performance of HDFC Bank. So the point is that it's been able to even at this level expand its CASA ratio, and this is, you know, small investors like me who give them deposits. It's not wholesale depositors who ask for a higher interest rate in exchange for 5, 7, 10, 500, 700 crore worth of deposits. So when the things improve, it is the lower cost of CASA which will be appreciated by the market. And I'd also, Sakshi, like to point out that when you see the valuation of HDFC Bank, it is trading somewhere like 15 to 20% below price to book, which is a 10-year average. So the 5-year PE median is price to book median is somewhere in the vicinity of, you know, one second, I'll tell you the latest data that I have is 3.65, the 5-year median. and at the moment the price to book is 2.71. So these are very, very juicy valuations. One must look at it from the point of view of adding in the format of SIP. Buy 10 shares every week, buy 3 shares every day. This is when you will average lower, and definitely the mean reversion is the only fundamental truth that is there in stock markets, and you will see this stock rebounding. So we have a 6% cut on the ADR. It opened exactly there, 6.5, 5% lower, and we have an extra, 1.5% the cut that you are seeing. So this is perfectly fine. For those who don't have HDFC Bank in their portfolio, this probably is a God-sent golden opportunity to add at current levels. Again, take a view of an independent financial advisor. Akshay will tell us what are the buying zones for HDFC Bank.
For HDFC Bank, see, the way I look at it, the momentum has been lost. One thing was that before the results, a lot of positives were factored in, and technically on the derivatives parameters, everything looked very strong, and the market got a surprise today. HDFC Bank opened gap down, and that's when you get a surprise, the option writers are caught on the wrong foot. This phenomena we saw exactly in Infosys too, where there was a very strong move in Infosys despite a muted result point. So here HDFC results are not so bad as you expect, but still what you get after the results is a severe gap down. So the supports which I foresee right now, if you look at the options data, 1500 is where the highest activity is positioned in the puts. It's a volatile market. Things are moving, happening too fast, too soon on the downside. There is a good chance that the short-term moves might be a bit accelerated. So if you are timing this on a technical front, I foresee levels of 1500, which I consider would be a good support zone in the current scheme of things.
Okay, 15 is there, and Sakshi, I've just done the math. The 5-year median PE is 3.65, like I had mentioned, and at the moment, HDFC Bank is available at a 25% discount to 5-year median PE. I can do it for 10 years as well, just give me some time. But 1500 is what Akshay says, and it's not very far away. So the 10-year price to book median for HDFC Bank is 3.99, and at the moment 2.71. So I think they should be somewhere in the vicinity of 33%. Just 1 second. Divided by 399, 32%. So this is the discount at which HDFC Bank is available.
Yeah.
And
Huge discount.
like I said, that it's a God-sent opportunity.
Get your shopping basket ready.
Absolutely. Especially on HDFC Bank. Sakshi, people don't really realize that what a large bank this is.
Yeah.
It controls 10% of Indian banking. And you should be prepared to buy the pain.
That's true. Buy the pain. That's the advice coming in, and even Akshay is giving the buying zones for HDFC Bank over here. But on the markets overall, Akshay, would you say that now is the time to just go ahead and book your profits and sit and watch for things to pan out and give you a clear direction? Or is it time, do you think, for the bears to create fresh shorts as well?
Well, if you look at the nature of the markets, the momentum has been absolutely fabulous in the last few weeks. But the main thing here was that Nifty was making a new high each time, but somewhere in the last leg of this journey, the highs were not being sustained. So somewhere the fatigue is getting into the market, as I understand. The budget is drawing close, and I believe this budget is not going to be a major market moving event, as I see it, ahead of the election. There is a good chance that going ahead, looking at the way the current market is moving, money might be pulled off in the table. So my suggestion would be, if you are making good profits, in the portfolios are doing pretty good, it's time that you take some money off off the table. At least 50% profit booking is what I advise, because at such elevated levels, even if there is a 4 to 5% correction in the Nifty, that would amount to a sizable correction in stocks. So I think prudence advises that you should take some money off the table. The way the volatility is closely is setting up in the indices, book some profits. And for shorts, yes, you can consider shorts, but then you need to have big stop losses if you want to build your positions at the current level.
Okay, it's almost 2:45. That essentially means we have another 45 minutes of trade left for Wednesday. Sakshi, let's look at the positives. See, ये बहुत अच्छी बात है कि market correct कर रहा है. It gives you an opportunity to get in at lower price points. But also look at stocks where the momentum is the highest and they are in the green. So pain all around, but the counter is strong, and there is some kind of activity on the long side here. So Sakshi, Cochin Shipyard. For those those of you who were with us exactly 1 week ago, Gaurang Shah had come in, and the stock was correcting, and Sakshi will use the phrase that Gaurang had said in trying to explain what he thinks of Cochin Shipyard. Sakshi, over to you.
So he did say it's a screaming buy when Cochin Shipyard and all the other shipbuilder stocks were actually declining, and specifically on Cochin Shipyard, he was very categorical. He stuck his neck out and he did say that you should go ahead and buy. And from that time till so far, we've already seen the stock rise up, not just from I think 780 odd levels is what he said.
Yeah, I think 765.
765. From that time, it's already 100 rupees.
This was the time of the adjustment of the split.
Yeah. Yes.
That particular day, and today morning before markets opened, he said Cochin Shipyard.
The first
And
thing, yeah.
of course, the first 10-15 minutes, the markets were also reacting positively. But the point is that one should stick a neck out when there is blood on the street, and that is what Gaurang did. Of course, there is a major event of Cochin Shipyard today, in which Prime Minister Shri Narendra Modi is inaugurating a ship repair unit for the company down south. Nevertheless, whatever froth is there might probably sort of spring out 2 or 3 days later, but very, very strong momentum. 2 crore 42 lakh shares traded, 7.5% higher. Just let's look at the volume buzzers in terms of Cochin Shipyard. Okay, this is 4x the 5-day average. Akshay, what are the medium term charts of Cochin Shipyard telling you?
The way the charts are, this has nothing to do with how the index is moving, because it's moving on its own, and really there is very strong demand as I see looking at the price action. The charts are a bit overstretched for comfort, but clearly if you chasing momentum, this is the stock to be in. 900 is where I foresee it. That might be some psychological resistance which might be vulnerable to slight profit booking, but if you are an investor, you have a medium term horizon on this stock, still there is no reason to worry about. 800 is a very strong support base. If as a risk management, you can have your stops below 800, but I believe eventually 945 to 975, these may be the targets which should be on in the medium term time frame for Cochin Shipyard.
Akshay, we've been pressing you incessantly for a view on HDFC Bank, Cochin Shipyard. I'm sure you also have a list of stocks in the form of a stick on that you've placed on the right edge of your computer कि ये इस पे आएगा तो खरीदूंगा, यहाँ पे आएगा तो एक buy call दूंगा. Maybe 2 or 3 stocks that you can share with us.
Well, yes, I would be keen on the buy side of trade. First would be in the pharma space. If you look at Lupin here, so Lupin has somewhere withered the storm and is still holding on to its morning gains. It's a positive close as of now. Even the medium term and broader term charts are still strong here. And I believe the support of 91375 is a very strong support zone. That's a trading support. And I believe 1450 is the target Lupin should be heading forward to. So I would recommend buy Lupin with a stop loss below 1375, keep a target of 1450. So healthcare space, Lupin would be one buying which I would be looking forward to. Apollo Hospital is another counter which has stood strong here. So healthcare space and pharma is my favorite bet here. Again, a potential breakout candidate. Apollo Hospital is right at the cusp of a breakout, which is around 5950. This breakout would see a strong momentum surge, which can easily lead the stock to 6100 on the upside. So yes, pharma, healthcare space, the defensive bets is what I may look forward to on the buy side if you want to beat the volatility in the current scenario.
Okay, let's look at Asian Paints. The company has come out with its Q3 earnings, and one can see that the domestic volume growth is at 12% year on year. There's a slight tick from the lowest point of the day on Asian Paints already. The EBITDA has come in at around 2,056 odd crore rupees. However, if you look at the net profit levels, you'll be able to see that the I'll just tell you what the net profit and the revenue have come in at. The net profit is 34.5% higher at 1475 odd crore rupees on a year-on-year basis. Revenues are just like 5.5% higher in trade, about 9,104 crores of revenues coming in on Asian Paints. Would you look at Asian Paints and tell us what is your call? Of course, the earnings have come in and therefore some impact of that. But of course, margins have improved on a year-on-year basis from 18.7% to 22.6%, volume growth of 12%. Looks like decent numbers on a prima facie basis. We will have to get down into the details going forward. But your own sense, Akshay?
Yes, if you look at the options distribution, especially ahead of on the result day, 33 strike in call, 3300 and 3200 strike in put. These draw the highest open interest. So clearly, the way the option writers are taking this result is that they want to play for a range bound or a neutral price reaction post the result. So the belief is that prices are not going to do much post results. They will be confined to a broader range, 3200 on the lower end, 3300 on the upper end. The broader texture of the stock, if you're a short term trader, is buy on support, that's near 3200. Some crucial short term moving averages to converge at the support of 3200. A recovery from here can see a slight rebound till around 3400 or 3450. So yes, from a short term, it's more of a trading buy. Medium term, it's been in a range, so really there is no trade working out here. So be a short term trader, look to buy on supports, which I mentioned, and the trade should work well.
Okay. Let's see how Asian Paints is at the moment on the markets. Of course, near its day's low, somewhere like 60 rupees lower, 32.37. This is one of those stocks, Sakshi, which is facing a lot of, how should I say, potential competition in the form of Grasim's impending paint launch, as also JSW Steel. So both of these business groups, the Jindals and the AV Birla group, are extremely deep pocketed, and the paints industry is actually made up of 4 players. Asian, which controls I think 40% of the market, Berger Paints, Shalimar Paints, and Kansa and Aerolac. So it's a juicy sector waiting to be sort of waiting for some more competition to come in, and that's why you see the valuations that were on Asian Paints earlier have somehow cooled, especially in 2023, Sakshi. You know, there was this theory in the market, buy quality at any price. That has somehow been, put to test, and it's failed in the first. कौन सा एग्जाम होते थे हमारे फर्स्ट टर्म के? नहीं प्री बोर्ड तो मुश्किल वाले जब हम 5th 6th में थे, फर्स्ट टर्म सेकंड टर्म थर्ड फर्स्ट टर्म में जरा ठीक से नंबर नहीं आया है एशियन पेंट्स के, सो ओनली टाइम विल टेल, बट एट द मोमेंट bit of weakness again creeping in into prices when you look at the Nifty. Okay, 21,581, very strong support on the 20 EMA. If this breaks, then we'll wait for a while. But Sakshi, I'd like to make out an observation. See, the Nifty is down 1.8, 1.9%, but these kind of cuts are not seen on mid-cap Nifty and small cap Nifty. So Nifty is suffering because of HDFC Bank, but it's a minor 1.3% cut on the Nifty small cap index, and it's an okayish less than 1% cut on Nifty Mid Cap 100. So what is the pain? There is really no pain. The pain is HDFC Bank, and it's giving you an opportunity. Like I said, I'm doing a lot of mathematics sitting here.
And global markets.
Yes.
There are these only two key
Let us
reasons.
see. I mean, I would imagine the flare up that's happening in the Middle East will get worse. But what can one do? There is nothing that we can do as far as those problems are concerned. But what is related to us, like this dip on HDFC Bank, maybe, we can just take some advantage and buy 3, 4, 5, 7, 10 shares daily for the next 5, 6 days. You would be surprised.
Yeah, with the kind of long-term wealth that HDFC Bank will create, and of course the kind of hedge that will provide to your overall portfolio as well.
I distinctly remember somewhere in 26th of October when Nifty was below 200 DMA, and we had suggested get into Nifty ETF on a daily basis for 10 days, and it worked out really well.
Okay. All right. Akshay, anything else where you believe one can still scout for some options? So would you look at any of the options at this point, or would you rather stay away?
Honestly, the way the market has reacted today, 3% down in Bank Nifty, Nifty losing a sizable chunk of its gains. This is happening at the market tops is really some scary signs if you are a short-term trader. So I would prefer for this froth to settle down before I get into my buy commitments. So not very keen to do a BTST trade today. Let the froth settle down. 21,450 would give me more comfort because that's where the market will make an attempt to stabilize. There's where I will hunt for some buying opportunities in the blue chip companies. So yes, I will prefer to have a wait and watch approach as the current market scenario goes.
Okay. Wait
Sakshi,
and watch.
I'll give you some
Yes,
more
sure.
examples. You remember there was this RBI circular on how unsecured loans had to be, the risk weight had to be increased.
Yes.
And Paytm had come up with a statement saying that we'll have to follow the guidelines put forth by the Reserve Bank of India, and therefore we'll be sort of trimming that business. The stock had opened gap down, right? Fallen 3-4 days. The lowest was 600 rupees. Look at the price now, 742. So this is exactly what will happen on HDFC Bank also. The problems that HDFC Bank has faced is because of a regulatory change in the business environment driven by Reserve Bank of India, nothing to do with HDFC Bank. So,
Very, very important point over
yes.
there.
So you must separate problems which are because of the bank and because of the environment issue in which HDFC Bank is operating. And it's corrected, and therefore it probably might have a decent uptick in the very medium term. And one obviously appreciates that the strength of the balance sheet of HDFC Bank is not in doubt at all, Sakshi.
Fair enough. So mouth-watering valuations right there. Perhaps investors can take the benefit, of course, after speaking to your own financial advisors. What we'll do is we'll take a very, very short break right here. When we return, half an hour more to go for the markets. We'll see how the markets really pan out and every strategy that you need to follow in this downtake of the market. Stay tuned with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi with me, Shel Bhatnagar, and also with us on our show is Akshay Bhagwat, Senior Vice President Derivatives Research at JM Financial. Akshay, do you think that the IT space is clearly the hiding space in this current fall in the market? Is that a space that you would be more comfortable in allocating more funds in this current downtick?
I completely agree to this. The results have been good, market reactions have been good, and most of the charts are suggesting there has been long additions in most of the big IT names. So clearly, if you are looking for a hiding space, you are looking for pockets to where the strength would be in the current mayhem which has just kicked off today. I believe IT would be the name. Strong names here are HCL Tech, Wipro, and TCS. So these three stocks I would be bullish on if you are a short-term trader. Even the IT index, as a matter of fact, 36,000 has been a breakout point for the IT index. It is right now around 36,969, and I believe it has a potential to make one more swing high till around 38,500. So as you correctly mentioned, yes, if you are keen on buying, IT space is where you should have your eyes on.
And exactly, this is what we've always suggested, that if you get a dip because of earnings-led changes, this is something to look at. 1640 for you as far as Infosys is concerned, and likes of mid-cap IT are doing phenomenally well. Look at Birla Soft today, record high if I am not mistaken. It's crossed 800 in the morning, I am very sure. Yes, 805. Ditto for KPIT, that was somewhere in the vicinity of 1564, and this is how Coforge, Oracle Financial Services
Yes.
is moving, and these are great value buys for portfolios. I think I was checking my notes, Sakshi, the other day, and I think it was Devan Choksi, who had said that you must have Oracle Finance in your portfolio, and he also explained this is low beta stock,
Yeah.
ये portfolio वाला ही है. This is not something that you should trade or buy in and out. So it's buy and hold on such stocks, which of course haven't done much in 2023, and they've just sort of opened the can. So today's gains, I think the IT index, let me just check, it's in the green.
Yeah.
If I may not, yes. See, it's 0.5% higher, 36,926. And let's just see the low on the pharma index, because these are two defensive counters. And if you remember Akshay's earlier conversation, he did mention that he's looking at Lupin, he's looking at Apollo Hospitals, and these are the kind of stocks that he prefers because they are defensive bets. Okay, low is 17,138. At the moment, 17,183, nothing much. But I'm just saying that this is how things are when it comes to money moving away from hot sectors and moving into defensive. Sakshi.
Absolutely. Hot sectors and the money flowing into defensive. So IT definitely 0.7%. It's the only sectoral gainer at this point in time. Rest of the sectors, they are down in trade. So you have HCL Technologies, TCS, LTI Mindtree, Infosys, Tech Mahindra. At least the only 9 names that are in the green. Of those, at least 4 to 5 are these IT names at this point in time. And not just that, they are actually trading at the day's high point for at least HCL Technologies, 1.5% as well. So consistent buying really happening there on those fronts. The other space that is perhaps buzzing is the life insurance space. Stocks like
Correct.
SBI Life Insurance, that's 1% higher. ICICI Lombard, of course, after the earnings, has really shot up 6% higher in the F&O space. It's the top gainer. And Gaurang in the morning did say that he has a positive coverage on both LIC, which did hit fresh record highs, and of course crossed the issue price of 904 for the very first time after it got listed in March of 2023. Since so far, what is the kind of view that you hold on the life insurance counters, Akshay, and anything where charts give you some positive indication from a short to medium term where investors can continue to build positions gradually?
Yes, absolutely. The life insurance space is a savior in today's market, and especially the chart structure of SBI Life here is a positive one. It has shown some rebounding signs from the support zone of 1380. basis spot. So that's a good buying level which I'm seeing. And a broader chart structure is signaling that the stock should be aiming to get past the swing highs of 1500. So yes, if you are looking for buying pockets in this market, life insurance, especially SBI Life, can be on your radar. As I mentioned, keep a stop below 1580, 1480, and go for targets of 1520, 1540 on the upside.
25 minutes left, Sakshi, for this day to pass. And as there is this lovely Chinese saying which says, this too shall pass. And so shall this day. But you were talking about earnings and stocks which are moving in the green. In fact, we completely, in our enthusiasm towards HDFC Bank or any such counter, forgot about ICICI General Insurance. It's up 6.5%.
Yeah, that's what.
And very, very strong volumes, 1457. As Sakshi mentioned earlier, that the insurance space is doing fairly well. ICICI Lombard for you, Akshay, what are the charts telling you?
Well, ICICI Lombard too broadly, it is a very strong chart. If I look at today's trading action, it has seen the buying additions, and especially 1400 is a level where the buying has been seen. Chart wise, yes, short term might see a spring all the way up till 1600 on the upside. The broader or the longer term charts still are suggestive of more of a range. So be a short-term trader in this. Keep slight conservative target 1600 should what you should be working with. Support area is 1400, and yes, suitable for a short-term investor or a trader. Keep targets of 1600.
Okay.
Okay, this is something which is looking. Let's look at the all-time high on ICICI General Insurance. It's hovering in that vicinity. No, it's fairly far off. 1670, and this was in September of 2021. So we are very, very far away from that kind of a gain. Let's also look at stocks which have moved substantially. I want to see if there are any 20% circuits today. Well, there are, but I don't want to take those names publicly, and we'll sort of avoid those names. How about sellers only? Nothing much here. So, apart from the pain that we feel in the Fin Nifty, the Nifty and the Bank Nifty, more or less, Sakshi, the markets are pretty much okay. Let us see. So, once the downtrend starts and the momentum accelerates, obviously the next day pent up selling is also there, just as there is pent up demand on the long side when it's a trending day. So similarly there's pent up selling also. So let's see how tomorrow pans out, and much will also depend on how US markets react, because see, we fell, HDFC Bank fell 6% because the ADR closed 6% lower. Now the ADR will see the reaction of 8.5% on HDFC Bank, and then maybe fall 2-3% more. So somehow there will be some sanity 2-3 days later. But keep your powder dry and keep a happy, how should I say, trading list ready. Some stocks should be added at your portfolio, and perhaps this is a golden opportunity. Typically this is how bull markets are constructed, that you see a very, very sharp sell-off. People who have made supernormal money book profit, wait for the sidelines, and it is also a time to welcome newer investors.
Absolutely. And perhaps that is working in the markets. You can see over 1,635 points of a cut right now on the Sensex. It's at 71,477. It's 2.2% cut over there. The Nifty is now down by 460 points. So we've given up the 21,600 mark. Likely that we may end below it, because now we are at 21,572. So keep an eye on that as well. It's the Nifty Bank that is clearly the pain point in today's trading session. The index, which is down by over 4.3% at and a loss of about 2,110 points. So it's a huge fall on the Nifty Bank. The sectors, they're all down in the red. After the Nifty Bank, it's metals that are losing steam, 3% down. You have PSU banks that it's 1.5% down, autos 1.3% down. Broader markets coming under pressure. It's only the IT space that manages to pull itself up 0.6% higher, bucking the trend at this point in time. Let's look at a few F&O gainers at this point. You, of course, apart from the IT names like L&T Technology Services, HCL Tech, Persistent, Birla Soft that Shell also mentioned, we also have BHEL now that's picking up pace, 1.7% higher in trade. Akshay, do you track BHEL, and if yes, so what are the charts really telling you here?
The point where BHEL is trading is a major resistance
Okay.
area. It has made 206, 208 levels on an intraday because these levels were seen way back, somewhere in 2014. These levels of 205, 210, from where we did see a sizable correction in bail. So my sense is overbought chart trading at resistance might be vulnerable for temporary
Natu, can you
profit
look at the
booking.
message
So
that
if you are a trader, I would suggest book out profits in BHEL. If you are an investor, really there is no reason to worry. It's a short-term profit booking which it might be vulnerable to, which might see a slight drag down till 195. Till now there is no major disruption on the charts, but for a trader it is better to wait and watch, book out profits if you own, and let it settle down before you take a fresh trade.
Okay, 3:11, 14 more minutes left for this pain to die down, at least for today. And the Nifty, I'm sorry, it's the BSC Consumer Durables Index. Okay, FMCG, also which is in the green. No, consumer durables would be the likes of Whirlpool.
Yeah.
I think BSC Consumer Durables Index. Let's
Titan.
Titan and all. Yes, absolutely. Okay, this is up at 51,857. My apologies, we can't be showing you the BSC Consumer Durables Index, but again, almost a record high. So there are parts of the markets actually which are completely immune to this pain that we are feeling. I hate to mention it, I think, but the BSE SME IPO index is actually up 2%. But let's just not get into this kind of a discussion. The point I'm trying to make is that this pain is not widespread.
Yeah.
And this pain is in India's best corporate balance sheet, and by some good fortune, the gods that are giving you an opportunity to get into this counter, which is HDFC Bank, at a lower price than yesterday.
Absolutely. Akshay, let's look at a few more spaces and see whether we can look at a view from you. The power and the energy space, for instance, that was still holding up in the morning trade. I can still see a few counters at least holding up into the green, the likes of Power Grid, CG Power from the broader markets, for example. It was Coal India and NTPC that were, moving higher in trade. We've seen a stunning rally in the entire power space with the demand surging to historic highs, and all the parts related to power, whether it's transmission, whether it's finance, all of them really moving up in trade. Do you still find charts that give you a buy signal despite the kind of move that we've already seen in this space?
The power space has not borne the brunt of the sell-off in today's index or the broader volatility. It has somehow managed to hang on today, but somewhere this sector has been an outperformer in the last couple of months. And if tomorrow the panic sets in, all these sectors might be slightly vulnerable for temporary profit booking. So yes, power sector is not done and dusted. It will give you good levels for re-entry. It's just a matter of timing when to do. As of now, I would still say let's wait for the froth to settle down. Stocks which have excellent strong technical setups here would be Tata Power, Power Grid and NTPC. A very strong chart structure. It is only that you might get them maybe a couple of percent down from the current rates, which would make them more stronger from a risk reward perspective. So power space is the space to be in, but let's wait for a slight dip before you commit your bets in the stocks of the sectors.
Power, I think today morning Gaurang was discussing that it has a secular up move in terms of how capacity additions have been coming in and how earnings upgrades are about to happen. Tata Power, I think 357 is also a record high, as also the likes of NTPC and suppliers like Coal India. They are also doing phenomenally well. But I think BHEL was one of the most pleasant surprises that came in the morning. I remember an intraday high of I think 211, 212. Let's see what the price is today. Okay, 213 is the high, 206.15. It's still closing 1.5% higher in trade today. So 315 at the moment, ladies and gentlemen. And let's now just do a quick check as far as the mid caps and the small caps are concerned. No point of panic or how should I say pain in the railway space. Hold your breath, Sakshi. RVNL 8% higher on substantially higher volumes, 241.90. IRFC 149.30, 5.25% higher. Masgaon Dock 2.5% higher, 23.86. CG Power 463.45, 2.44% higher. We've just discussed BHEL. NHPC 1.2% higher, 73.25. Lupin almost 1400, 0.5% higher. And you know, the likes of Gland Pharma, Max Health, these are the stocks which are ending in the green. Substantial gains, and the best part, good volumes.
Fantastic. Even in this market, we've been able to find some very, very strong movers. You know, you were talking about the healthcare space, Akshay. You know, would you look at an extended name, say, like Metropolis Healthcare, for example? You know, you did take the name of Apollo Hospitals, I believe, and Max Healthcare to that tune as well. And look at this entire healthcare space and tell us, is there something that buyers in this space should know about?
Yes, so these would be the hiding bets, or if in case the pockets where you might see some buying or the buy flow getting into chasing these stocks. So not a very strong long-term story or a medium-term story, but definitely in the current market mayhem which we are in, these would be the spaces to buy forward to. Pharma and the healthcare space, Metropolis, Ipca Labs, Apollo Hospitals. So all these charts are hinting that there might be some carry forward buying bets which are slowly building up base in the intraday trading session. So I would have all these names on my buy watch list. If you are a short-term trader, they have a scope to give you a return easily over 2 to 3% from a trading perspective, or as a BTST bets for tomorrow's or day after tomorrow's trade.
Okay, Sakshi, there's one stock I'd like to mark, and it's IEX,
Okay.
Indian Energy Exchange. I think it's a 10% dip. I'm not sure if I remember reading any news which might have resulted in this kind of a fall. It's pretty substantial, 146.85, and on very, very heavy volumes, somewhere like, you know, 66 million. So 6.6 crore shares have been traded. Let's look at the volume picture on this one. Okay, IEX, 2,170 crores. I'm sure, no, I'm so sorry, 1,000 crores. 1,000 crores worth of transaction done, 10% lower and 147. Akshay, is there some news on IEX which I may have missed? Let me just check. If you could just look at the charts in the meantime.
Uh, well, chart-wise, IEX has broken down from a short-term consolidation zone. This consolidation support base was slowly building up at 160, and possibly that was the support below which most of the stops got triggered in the early market opening, which we saw today. So that trigger in the long bets below 160 has seen a significant fall in the stocks. The support which I look forward to next is 140. So still maybe 7-8 rupees more on the downside, and this really kills the momentum because we broke 160. So it's going to take some bit of time for IEX now to stabilize. Probably 138, 140 would be the levels where some stability might get in, as I foresee right now.
Okay, it's something to do with a uniform market clearing price for buyers and sellers, and that's spooked investors in IEX. Let's see. But like I said, these are godsend opportunities. We'll wait for IEX to settle down and then probably take a view 2-3 days later. But today's fall is accompanied by a very, very sharp rise in volume, and that's the reason why I got it on some of the software that I put in. Okay, Sakshi, we had discussed the mid caps. Now we look at small caps. Top gainers in small caps are, we've discussed Cochin Shipyard fairly well, now closing 6.5% higher, 844.75. Remember the day's high was somewhere like 882, right? That's what I remember. Hutco, no let up, 5% higher, 138.05. The likes of Medanta Hospital, and this is a theme that Akshay has pointed out, 1031, 3% higher on Medanta. Again, the electric vehicle theme, JBM Auto, 1919, 3.5%, 4% higher. Then we have the likes of NLC India, 232, 2.2% higher. SGVN, 1.5% higher, 101.30. And of course, Med Plus, 745, a percent higher. So these are quality balance sheets, Sakshi, which really haven't suffered any dent despite the pain that we see on the Nifty.
Absolutely, and you rightly pointed out about the railway space also, share. I think it's just clearly buzzing. In fact, now more stocks from the space have joined the party apart from RVNL. That's of course leading the show from the railways today. IRFC is now 5.5% higher. We also have Ircon International that's again coming up in trade. It's also up by about 2.5% in trade as well. How would you look at the railway space right now, Akshay? And of course, do these charts still signal, buy at these zones?
Yeah, absolutely. Railway space is not at all disturbed by what is happening in and around the market, especially the likes of RVNL and IRFC. It's unstoppable, and momentum indicators, you put them on the charts, and there's where you limit yourself. So I believe still maybe a long way to go. The way the momentum is chasing these counters, I would still continue to hold my buying bets if I have. Fresh buy positions, yes, not comfortable, highly overstretched for comfort. But if you are a buyer, hold them still. I believe there is still more rally or further upside to go in most of the rail counters as I see on the charts.
Okay. So that's the railway counters. RVNL clearly 9.2% higher. Day's high level at 244 rupees. Then you also have IRFC. That's been on an upward run for the at least last 4 trading sessions. It's 5.5% higher.
I have stopped seeing that chart. मेरे को डर लगता है अब.
I know. This was very, very interestingly one stock that just came in at an issue price, got listed at just 26 rupees in 2021. From that time till 2023, it was just within that 4 rupees trading range, 26 rupees to 30 rupees. It was all, the action has happened from April of 2023 onwards till so far, last 6 months, when we have seen substantial, I think 300% move is what we would have seen in the last 6 months alone, and it's now a 150 rupees kind of a stock that is continually moving
Look at
higher.
the low of today, 133 rupees. This is in the first 5-7 minutes of trade on IRFC today, and 4,710 crores worth of IRFC has been traded. Would you believe it? It's more expensive on the price to book ratio compared with HDFC Bank.
Wow.
I think this is okay. Let me just check this. I think this is 4 times price to book. Just a moment, I'll let you know. IRFC in terms of, and Sakshi is absolutely right. The rallies actually happened in the last 3-4 months only. When people suddenly realized that, my God, we have a railway business which is listed. Let's just go into it. Okay, I have a 3-year price history on this one. Yes. Okay. 3 year तो PE median है ही नहीं. अभी list हुआ है ये. Okay. The PE is 6 price to earnings is 6.67. Okay, let me just give you price to book. That will be far more important. Okay, yes, here it is. The price to book is 4 compared with the HDFC Bank's price to book of 3.77.
Wow, so it is.
So that's how, I don't know whether to use the word irrational और whether to use the word sensible markets है. एक तरफ HDFC Bank, एक तरफ IRFC.
Absolutely. Very, very interesting. Okay, just about 5 minutes to go, Akshay. Anything else that comes to your mind that catches your fancy in this kind of a market which is absolutely, down in trade, but anything that catches your eye?
No, actually, it's just the healthcare space and some pockets of IT, which is kind of, just holding on to their gains in the morning. I believe, the way the market has seen a hammering today, it's prudence demands that you just wait for tomorrow's opening, let it stabilize, let some action brew on the buy side, and that would be the first signs that you start searching for good stocks on maybe valuations or maybe on the technical front. But I believe let the fraud settle before you make fresh buy commitments.
Okay. Let's look at the Nifty 500 basket now and see if there is anything else that's buzzing there. Avanti Feeds, that's up by 5.5% in trade. And of course, we've been, Shell, even you have pointed out the fertilizers and the chemical space,
Yeah.
FACT, RCF, these all of kind of stocks that have been periodically moving high in trade. Today it's Avanti Feeds. How would you really look at this stock? Akshay, anything to track here?
Avanti
It will be very
Feeds.
hard to give Akshay to give a view on this one. This is a shrimp maker. I'm sure he'll say Rene do.
Chart wise, it's absolutely a very strong chart structure. There was a breakout at 520. The breakout levels were revisited in today's openings, and we have seen a strong recovery from those levels. So I have no doubts on the charts. It's very strongly positioned. 650 is where it should be aiming for. So yes, if you're looking for buying a stock which is nothing to do with the market move, this should be the stock. Avanti Feeds, stop loss 515, target 650 is where I see the stock moving for.
Okay. Respectfully, I would just stay away from commenting. I don't look at, shrimp
Okay.
makers or.
Okay, let's look at the markets now. We're just about 3 minutes to go, but clearly looks like we are going to have a close that's below 21,600. Akshay, do you think this will trigger a further fall, and how much more correction then from here, or do you think there'll be a rebound then tomorrow?
See, tomorrow is the weekly expiry for Nifty. 21,500 has a lot of put writing interest. And the way the markets are moving, there is a very high probability that it will try to shake the put writers at the 21,500 strike right at the opening bells. So I am foreseeing a downside till 21,450,460 roughly. So yes, some more pain is left, maybe 100 more points to go further down. A gap down is where I possibly see the Nifty heading for if you are looking from a STBT type of trade or tomorrow's trading session.
And what about Nifty Bank then for tomorrow? What would you say?
Now Nifty Bank would also see a weak opening most probably, but the expiry is done and dusted, a very bad expiry. But we are somehow managing to cling on to the 46,000 support. So maybe the opening is slightly on the lower end tomorrow, but I think Bank Nifty might stage some kind of a rebound in tomorrow's trade. So look for Bank Nifty over Nifty in tomorrow's trade. The first half an hour should tell how things should pan out for the day, but I see a weak opening, but then expecting Bank Nifty to stabilize around 46,000. So that's the level you need to have on your radar, 46,000. If it sustains above these levels, then look for some kind of a spring up buying in intraday trade for tomorrow.
Okay, ladies and gentlemen, now we'll start wrapping the market. Sakshi, the only positive thing on the Nifty that I see is that 20 DMA has held at least for today. It was somewhere in the vicinity of 21,572. Again, it depends whether you watch exponential or simple, but mathematically it's held. Let's see what happens tomorrow. It's a big relief. So from 22,124, we are now down to 21,574. That's 400 plus another 100 and plus maybe 150. So 550 point correction so far in 2 days, and let's see how it goes. I'd like to, in my habit, point out the positives that we have seen in this correction, and it's led by the IT pack. Sakshi, it goes on to show the quality of earnings that HCL Tech had put up, that the stock is, I think, the top gainer as far as Nifty is concerned, yes, 1.2% higher. And this is something that should be appreciated by the markets as well on days when the Nifty improves dramatically. So Nifty down about 4%, 2%, and HCL Tech is up about 1.2%. What's worrisome? Undoubtedly HDFC Bank, and it's closing at its day's low, 8.3% down on very, very heavy volumes exceeding 11,000 crore rupees. And that's primarily because earnings were disappointing as far as the markets are concerned. At this value, Sakshi, I think this volume is higher than, this volume is the highest since 15th of September 2023, which was again the earnings day for HDFC Bank. So again, the stock had that day closed in the green and now it's closed in the red. Well, that is how markets are. Let's just look at the pullers and draggers on the Nifty. That will show you the stocks that contributed to this very sharp fall. HDFC Bank is responsible for a downtick of 151 points. ICICI Bank is responsible for a downtick of 51 points. Kotak and Axis Bank are responsible for a downtick of 25 points respectively, and Reliance Industries down about 1%. It's contributed to a fall of 22 points on the Nifty. So Reliance and HDFC Bank, the two heaviest weighted counters in the red. Infosys in the green, 0.5% higher, contributed 8.7 points to Nifty's positive total. TCS, HCL, Tech Mahindra, these are the other three top gainers, and of course Apollo Hospitals bringing up the rear, 2 points for that one. So this is how, Sakshi, the index has shut shop today.
I think almost the biggest fall in 2 years time frame for the Nifty and for the Nifty Bank, and I think the biggest fall for HDFC in the last 3 years is what we've already witnessed. But should the FIIs continue to pour in this dip, we will see perhaps HDFC Bank attract a lot of flows from their end, but we will continue to note that once we get those provisional data from NSE as to what FIIs have done. But thanks a lot, Akshay, for being with us throughout this trading session and helping us navigate through the sharp fall in the markets and helping our viewers really understand where exactly should one be treading very, very cautiously and where exactly to look for value in this kind of a market. Always a pleasure having you with us on Business Today Television. With that, thanks a lot, Shell, also for being with us on this edition. We will both see you tomorrow morning, and hopes are high as to whether there could be some kind of a bright green day tomorrow ahead. We will stay tuned.
Let's pray for that.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome to Business Today Television. I am Siddharth Zarabi, and with me, one of the foremost names in Indian business and in the renewable energy space, Suman Sinha of Renew Power. Suman, thank you very much for being here. The sun is out and it's recharging all our batteries. But before we get into that space, I want to start by getting your sense of how the global economy is doing in crucial geographies, and you have experience of that as well, because the sense we are getting is the worst seems to be behind us. Last year the mood was far more pessimistic, yet global CEOs are far more pessimistic than their Indian counterparts. That's what the latest study tells us. So how's it shaping up according to you?
Yeah, thank you, Siddharth. It's terrific to be here with the sun on our backs. That's actually making it warmer, so we can actually sit here without jackets. But look, I think in a sense, I think that's what we are looking for in 2024 as well, which is the sun behind our backs a little bit. The big thing that has happened or that has changed is that last year, there was a lot of uncertainty about the US interest rate environment and the general interest rate environment in the Western world. And that was leading to a lot of risk-off sentiment. Capital-intensive sectors were getting impacted, particularly renewables, for example. And there's a lot of uncertainty about when that situation might be reversing itself. What we are now seeing is, at the end of last year, when the US Fed decided to pivot a little bit, I think now the conversation has switched to when are interest rates going to start coming down and how much will they come down by this year. And I think that itself is leading to a very significant change in sentiment among the financial investing community, because what that means is that that fixed income, that is debt assets, suddenly become more attractive, and you'll start seeing the ability of various companies to raise capital in the debt markets going up. You'll also see a lot more positive sentiment on the equity markets as equity markets are beginning to rally. So I think all of that is very positive. The other good thing that is happening is that given the fact that the US has not gone into a recession so far, there is a very clear view that is now building up that this might actually be a soft landing scenario. And that obviously is positive for everybody, because including India, because it means that our external sector will continue to do well. And therefore the overall environment from a macroeconomic standpoint is looking a lot more favorable this year than it did last year. And I think by the second half of this year, we'll see much more normalcy prevailing in capital markets. And I think business sentiment is going to be a lot more positive.
One of the facets of the recent past has been energy inflation of the kind that that people haven't seen, especially in the developed world.